Crude oil is still hovering around $100 a barrel after sliding to a 3-month low this week, but prices remain about 13% higher since the Ukraine invasion. And two of the world's biggest energy players could not be handling the situation more differently. Seema Modi is here to explain. Seema?
Kelly, let's start with Germany, struggling to adjust to Russia's 60% cut in the natural gas flowing in through the Nord Stream pipeline. The government is dimming street lights, shutting down pools, and rationing hot water, as the FT and others report. Now, the goal is to build up stocks for the winter. Germany currently has storage levels of 63%, according to JP Morgan, with a target of 90% by the end of November. It's all taking a toll on the economy and the stock market. Germany, currently the worst performing stock market in the world right now, down about 18%, whereas the MSCI World Index is down just about 15%. Now, on the flip side, Western nations have been quick to criticize India for increasing its purchases of Russian oil, but perhaps overlooked as the pressure that is building on the government and the prime minister there to tackle rampant inflation. Get this, for every $1 increase in the price of oil, India's import bill rises by around $2.1 billion. That's according to estimates from Nomura. And as Frank Wisner, the former ambassador to India, told me, India's domestic stability is a key priority right now, and the prospect of the U.S. or Europe punishing India with sanctions at this point seems relatively low, given the role that India is playing in helping these nations challenge China in the East, Kelly.
And maybe the clearest way to show the significance even to U.S. consumers here is where would the oil or gasoline or energy prices be if India stopped or slowed its purchases of these barrels?
Spoke to John Kilduff at Again Capital. He put together some really interesting analysis that shows if India were to stop buying Russian energy, the price of oil would spike by around $8 to $10 a barrel. So an interesting position the country is in. In one way, yes, getting criticized by the West for financing Russia's wartime efforts by continuing to purchase its energy.
Right.
But at the same time, by doing so and taking some of that supply off the market, it's helping Americans and keeping the price lower than it would have been.
And here, I mean, the details of what's happening in Germany are terrifying. I mean, they will get terrifying if it doesn't get much better. Rationing hot water, dimming streetlights, shutting down swimming pools. You know, the situation is dramatic. Germany's social peace is in great danger, says, you know, one of the people quoted in this FT piece. I mean, this is chilling stuff.
It is. And, you know, in a way, if this were an emerging market and you heard these type of actions being taken, I mean, we're not talking about an emerging market.
Right,
this is Germany, one of the largest nations in Europe, usually amidst the strongest, typically, at least historically. So the fact that these are type of measures they're undergoing to ensure that they're in somewhat of a stable position in the winter is certainly telling.
Yeah, it's very strikingly different responses here. Seema, thank you.